And I became that by not being overly concerned day to day. As you know, I've graded tens of thousands of investment portfolios for free, 25 years. And I've noticed that a lot of investors make the same mistake continually. The first is that they confuse volatility with risk. There isn't an asset class that I know of that hasn't been up or down in the near term 10% for no reason whatsoever. The second is that while most investors get the strategy right, those strategies are long-term, and most investors utilize short-term tactics against the long-term narrative. And that's almost a guarantee of loss. If you believe that over 5 years, the gold price is going to double or triple, but you have trauma holding gold over a long weekend, what you're doing is employing tactics that are inconsistent with your strategy. Many investors focus slavishly on the price of something as opposed to the value. I own gold because I think its rise will mirror the deterioration in the purchasing power of the US dollar over 10 years. I couldn't care less what happens next week. I am a consistent purchaser of gold because I generate capital in excess of my needs for consumption. My own interests are served by lower gold prices because I'm investing for 5 years from now and 10 years from now, and I'd like to lower my average cost of gold acquisition. While I realize that my circumstance is different from the circumstance of many of your viewers, what I want the viewers to take away is if their strategy is a 5-year strategy, their tactic can't be a 3-week or 4-week tactic.
Because you're still buying gold, Rick.
Yes, ma'am.
And you will always be buying gold.
Not always. There have been times, 2009 was a time, where there were other asset classes that appeared cheaper to me. Gold became liquidity for me. There were assets in 2009, particularly community bank stocks, that were so cheap that I had to sell some gold to buy them. Gold is both insurance for me and it's liquidity. If there's an asset class that is more attractive to me, I will certainly shift my portfolio allocation. But we're nowhere near that today.
I mentioned the tariffs before and how obviously the equity market was rejoicing to this 90-day truce. Is the party going to be short-lived? I think more importantly, I just want to get your thoughts on how the tariff plays out here, Rick, and how much longer you think this is going to go on for.
I hope you can tolerate.
If I had to cut
hate.
To the chase.
I hope you can tolerate hate in your social media comments. Tariffs are taxes, and taxes are bad. Our president, like our former presidents, are transactional. And what tariffs really are is a way to appeal to the basest part of the political instincts of his supporters, and also a way to punish his enemies and reward his friends. It is a political strategy that's spectacular. It's an economic strategy that's tragic. Tariffs are taxes, and taxes are bad.
I read this quote from Jeff Christian over at CPM Group. You know Jeff, Rick. He said, if you go back to 1929, 1930 to Smoot-Hawley, the last time we had this degree of tariffs, they exacerbated the Depression. Do you agree with that statement? Yeah, okay. That's not good.
Daniela, your purchasing decisions, your investment decisions should be made by you. Why would you suborn your family's preferences in the future to your president? How can your president make optimal spending and investment decisions for 340 million Americans? Does he know you? Does he know your children? Does he know what you want to feed them for lunch? No. The idea that all of us would suborn our preference to somebody for somebody's own political gain so that he can assign those preferences as he sees fit is an insanity.
Jamie Dimon came out earlier today saying he still sees a recession this year. The people watching want to know what Rick Rule thinks.
He's smarter than me as an economist. Uh, I am what he pretends to be. I'm a banker, a lender. uh, I'm not an economist, but I am afraid of a recession. I think we're overdue for a slowdown. I think that we've had a liquidity driven market for a long time. I think that confidence is receding. As confidence recedes, liquidity recedes. Uh,